Hey, what's going on, team? It's Braden from TechBud Solutions, and today I wanted to talk about what a skillful stock trader is. So, a skillful stock trader isn't good at making a price go up, he is good at risk management. Making money in the stock market is all based on luck because you have no control over what a stock's price do, what to buy it. What you do have control over is managing your risk to be prepared for any possible outcome that would be against your favor. You are also in control of using indicators to see the likelihood of a stock's price moving in a certain direction. So, the first step would be to find a stock. Here we have Tesla. This is the stock that I found, and I really like the stock. Let's go ahead and zoom out here and show you this time frame. 30-minute, 30-day chart. So then what you're going to do next is you're going to check the indicators. So here we have our indicator. The main thing that we're going to be focusing on here is the 180-day simple moving average line, which is this green line right here. So if we switch out to the 180-day 4-hour chart, we see that Tesla is very close to actually just kind of bounced off that 180-day simple moving average line. So if we go back to the 30-day chart, we can kind of infer that EMA line at the 180-day, this was about that $700 mark. So there's a clear resistance at $700. Let's go back to the 30-day. So we draw the resistance line at $710 because we do want to overestimate slightly and see if it does go back down from there, bounce on that line, and continue down. So that's why we have it there as the resistance. And also we know if it does break $710 and bounces off that line after it breaks it, then it will continue on up to 800, which would be the next resistance level. So I marked this as the support, $635, because on the 30-day, 30-minute chart, the simple moving average is showing that as a support line. So if it does tap that, I have an alert set to watch the price and see if it wants to bounce off of it, go through it, go back under, and then bounce again. So pretty much what I'm looking for is a possible reversal play on this. So I need to wait for a bounce to actually happen to confirm if the bounce is actually going to run back up to the resistance, because you never know. You have to always wait for confirmation. That's a rule in trading. So I have an alert there. If it gets to $635, I'll start watching it and decide whether this is actually going to bounce slightly and the trend will continue. And then I also have alert set for $710 to see what happens right when it gets that resistance, if it's just going to bounce off of it, which it kind of looked like it almost did. It's making a lower high. This could just be a slight pullback before it decides to test it. And if it does, we could either see it break through, bounce on it, continue up, or get rejected and then show signs of downtrend, and we can go on the short side. So there's plenty of opportunities for us to do here. I'm thinking of selling a credit spread. So what I would do here is I would sell a credit spread at a few dollars below the price that I want to bet it stays above, which would offer about 100% return. So I would bet that it stays above 630 when it's at 635 once it confirms the bounce. And I probably would be right. Of course, I would only enter this position with a dollar amount I'm comfortable with losing, because anything could happen in the stock market. Remember what I said, guys. It's all based on luck. You have no control over what a stock's price does once you buy it. So let's go back to the chart here. I have the alert set, and if it hits this and it decides to continue up, I'll do the same thing I did at this level. And if it decides to bounce off of it, then I'll pretty much do the opposite of this, where I bet that it stays below $700, like $15. Should be about right, around that range. And that would offer about the same return as every normal spread, a few dollars out of the money, about 100% return, on average. So that's the play that I'm gonna make on Tesla. You see what I did. I use the moving average, I use the support and resistance, I have the lower risk options play for anything to go wrong, and I have my alert set to watch it to confirm that it will bounce. So that's the play I'm doing, and the reason I'm making this video is to show you guys and to show myself so I can rewatch it, learn more later, because I did lose a lot of money this week because I was very tired from waking up early in the morning in school, and I was making silly decisions, panic selling, and chasing my losses. So I decided that I need to learn more, and I also want to show you guys how spreads are a very passive form of income where you don't actually have to be attentive on it. The only point where you have to be attentive is entering the position, and then after you do that, you should be good to just wait on it to do its thing, and then at the end of the week, you collect your profit. So it's passive income, which is why it's great for school, because school really messes with my trading abilities. That's the video for today, guys. Drop a like. Tomorrow I will be editing and releasing the week 2 recap of my trading, and you guys, it is going to be a red week. I did lose quite a bit of money, but you're gonna have to wait to watch that, and I'll explain all the reasons why I actually made some bad mistakes with delta hedging, where I didn't do it correctly, and I did it at the wrong date, and it really messed everything up. So like the video and be prepared for that video tomorrow. Thanks for watching.